All right, what's up everybody? Happy New Year's. Currently it's the 30th of December, but by the time I post this video, it should be New Year's. So just want to say Happy New Year's to everybody, and hopefully 2021 will bring in some great days and profitable trading. So as you can see in the title of this video, I'm going to be showing you the best indicator that you could use to improve your trading. This is the RSI, the Relative Strength Index. The way this works is it's a momentum indicator that'll give you overbought and oversold signals. If you want to see how the RSI is calculated, you can go and look it up, Investopedia. They have an overall step-by-step outline of what's used to calculate it, but calculations aren't exactly too important. We just need to understand the way that the RSI works on a chart and how we can use its signals to enter and close positions. All right, so now we've got a chart open, and as you can see down here, this is my RSI indicator that I have on here. It looks a little bit different from the RSI that I have on my Thinkorswim platform. It's a little bit more colorful, but for now, this is just for educational purposes. We have a straight purple outline of what the RSI looks like. So there are two elements of the RSI, overbought and oversold. The way this works is that when price is above 70 on the RSI, which is right here, price is overbought. And down here, when it's below 30, price is oversold. And the way that we use this is to generate signals for us to either buy and sell. Going back to the equation in the step one, you can see that the RSI is calculated using an average gain or average loss of a certain period. And as it says down here, we're using 14 periods. So when I go back to my chart in the bottom left, you'll see that this is a 14 period RSI indicator, meaning that it'll take the price movement from the last 14 periods or candlesticks depending on what time frame you're on. So right now we're on a daily chart, and if you compare the RSI to the actual chart's price movement, you can see that they look very similar. Back in March, when the market was selling off very aggressively, you can see that price on the daily chart dipped into an oversold territory, and then price continued to push down and we came up into overbought territories. And as you see, price begins pushing in the opposite direction once price becomes overbought or oversold. Now, this is all beginner information of the RSI, and it's just the standard use of overbought and oversold signals that can determine when you might want to start exiting or entering your positions. However, there's two different things I want to talk about that can help you become more advanced when you use this indicator. The first one is RSI compared to market conditions, and the second one is bullish and bearish divergence. So I'm going to first start talking about the first example I give, and that is RSI compared to price movement and what the structure is. So right now, the condition of the market that we're looking at on the daily time frame is in an uptrend. And you see here that price becomes oversold multiple times yet the trend continues moving up. Many beginners, when they first learn about the RSI, don't fully understand how it works compared to market conditions. As I've said before, there are two different market conditions, trending and ranging. In a trending market, or specifically an uptrending market, the RSI, when it's in an overbought situation, is best used to indicate when the market will likely pull back, not reverse, which is very important, and many beginners fail to realize this. It is very likely that in an uptrend, you will not have any buying entries, which will make you miss out on major price movements. So as you can see on this daily chart, there were pullback opportunities to continue entering long, but on the RSI, you didn't get any signals. And that's where many beginners go wrong. The RSI in this situation would tell you when you'd want to start closing some of your positions or when you would expect a potential pullback to get into a larger position. And as I zoom in here where the price is trending down, you can see the same, but for the reverse. You get areas where price will often begin to pull back. However, you do not get entries to begin shorting. Now I'm going to talk about the second type of market condition, which is consolidation or a ranging market. When the market condition is very consolidated and is starting to become choppy, you don't use the RSI in the same manner that you would use it when the market is trending. This is an example of a market that's not really pushing that much higher and it's becoming a lot more choppy. And here we can see that price on the RSI becomes oversold, right? And then when price comes back down, it becomes overbought. In this situation, you want to buy when price is oversold and short when price is overbought. Once price eventually breaks out of this area, then you can continue on using your trend following strategies. All right, so now I'm on an hourly chart and I'm going to show you the second way to use the RSI compared to price, and this is using bullish and bearish divergence. And the way that this works is that you're looking for discrepancies between the RSI's movement and price action. So right here on the hourly chart, you can see that price is making a higher high. However, when you go to the same areas on the RSI, you can see that price is actually making a lower high. This discrepancy between price action and the RSI is called a bearish divergence, when price is pushing higher but the RSI is not. This indicates that price is about to reverse. And as you can see here, the market began trending down. And here, if we follow this trend, we get an example of bullish divergence. This is where price is continuing lower and lower. However, on the RSI, price is continuing higher. In this divergence situation, you can see that price is indicating signs of weakness to the downside, and you could see a potential push to the upside. So this is just an intro to the RSI and how I use it and how other advanced traders use it, and how you can also use it as a beginner. There's definitely a lot more that can be said, but I just want to introduce this to you so that you can begin using it on your chart and begin using it more effectively. So that's all for this video. Make sure you like and subscribe, and check out my Discord in the description where I answer questions for everybody, and I also give trade ideas.